Hello everyone, today's topic is late payments. So we're going to dive in and discuss how late payments can affect your ability to qualify for a mortgage loan. So a late payment is the single most destructive occurrence on a credit report. A late payment will typically result in a loss of 30 to 100 points depending on your score at the time of the late payment. And unfortunately, the higher your score is, the more points you're subject to lose when you incur a new late payment. Now, when a late payment does occur, what you'll experience is a score cap. So we're going to go over what a score cap is and what you need to be aware of. So credit scores are divided into 20-point increments. So 580, 600, 620, 640, etc. Each score increment represents a qualification threshold. So, one of the lowest qualification thresholds for an FHA loan, for example, may be a 580. Obviously, that can change, and you want to always talk to a loan officer as far as what those qualifications are in terms of the score that you actually need in order to qualify for the loan that you're looking to get qualified for. So this is for example purposes, but that 580 would be, in many cases, a minimum threshold to qualify for an FHA loan. So a late payment will cap your score from reaching the next increment for 12 months, assuming no new late payments are incurred. And we'll go over an example of this on the next slide. So if a new late payment takes your score to a 582, for example, your score will then be subject to that score cap, which will cap your score in this example at a 599 because you're between that 580 and 600 threshold. So the cap is essentially keeping you from reaching that 600 until you show 12 consecutive months of no late payments. Now, the biggest thing that comes with getting past thresholds, the 580, 600, 620, is typically better interest rates. So, interest rates as well as qualifying in general. So, if the loan you're looking to qualify for requires a 600 score, your score in this example is going to be capped at that 599 until you show those 12 months of no late payments. So once you complete 12 months of on-time payment history on all of your accounts, not just the account that you had a late payment on, but all of your accounts, then you'll be able to achieve that 600 plus credit score in this example. Now, please keep in mind, a score cap means that regardless of what you do, your score will not break its designated cap until the 12 months of on-time payments on all accounts is achieved. This means no matter how many negative items are deleted or how many collection accounts you pay off, your score will still not break the cap prior to 12 months of on-time payments on all accounts. A lot of times, this information, when people are excited about purchasing a home and realize that their time frame has been pushed out more than they would like it or they were anticipating on that being, this can be very discouraging. They want to, potentially find a new realtor to work with, a new credit repair agency to work with. So it's important to remember that it doesn't matter what you do. You can go get a different plan. You can talk to someone else. That score cap is still going to exist and keep you from breaking that cap until you get those 12 months of on-time payments. We do have a little bit later in this slide deck one loophole that you may be able to take advantage of, so we'll explain what that is. But in general, you're subject to needing those 12 months of on-time payments before you're able to break that score cap. So deleting late payments, if you have late payments on your credit report, a lot of times you want to go and potentially dispute those to see if you can't get them removed, or if it's legitimately you feel that those late payments were inaccurate. we definitely recommend disputing those as long as, you know, it meets all the factors of it being a safe account to dispute, because dependent upon date of last activity, you want to be very careful about disputing something. So if this is an item that has a late payment reporting from 3 years ago, but that account hasn't actually been reporting each month for the last 3 years, by disputing that now, you could potentially hurt your score further. So you just want to be very careful, particularly if there's still a balance on that account. So just be very careful about what you actually dispute, and we'll go over that in other lessons. But we just want to make sure that we're setting a realistic expectation as far as late payments getting deleted. So in the event that you have one 30-day late payment, so it's not a 60-day, it's not a 90-day, it's not multiple 30-day late payments, but you have an account that there's one late payment reporting against you on your credit report, we highly suggest sending that creditor, so not a dispute to the actual credit bureaus, but to the creditor themselves, a goodwill gesture letter, which you'll find a template for back in the course. But the goodwill gestures are typically not granted by creditors if you have more than the one 30-day late payment on your account. So you can still try, but the most success we've seen with those goodwill gestures, if it's just one late payment and it's not a habit that they can see. If they can see that this is a habit, they're most likely not going to delete that late payment. But if you have 100% positive history with them and just that one time, you know, whatever ended up happening to result in that late payment, a lot of times creditors kind of forgive that. So late payments are rarely deleted through that dispute process with the credit bureaus. And like I said, it won't hurt to dispute that late payment, but if it is verified, your score will still be subject to that 12-month cap on your score. And then also just be careful about the items that you are disputing on your credit report, and we'll discuss that in a later lesson as well. Now, a question that we get frequently is, you know, can we break a score cap sooner than the 12 months? So the only way to potentially break a score cap prior to completing those 12 months of on-time payments is to obtain multiple years of positive revolving history. Now, this would require being added as an authorized user to an existing credit card that meets all of the following criteria that I'm going to cover on the next slide here. Okay, so the criteria that would need to be met in order to break that score cap, and you know, variables will change dependent on these criteria, and I'll walk through that now. So the first criteria is you need consent from someone to actually add you as an authorized user to their existing revolving trade line. This will not affect their credit score at all by adding you to their trade line. The second criteria is length of history. So the more late payments you have, the more positive history that the card is going to need. So typically to break a score cap, you're going to need a minimum of 5 years of history, meaning that the card you're getting added to needs to have been opened and positive for a minimum of 5 years. Now, that's usually with one late payment. If you've got multiple late payments, sometimes you need 7 years, sometimes you need 10 years. So obviously the more history that there is, that's going to benefit your score more and allow you the ability to break that score cap. We always recommend reaching out to a credit specialist to determine how many years of history you're going to actually need in order to break the score cap conditions that you find yourself in. The third criteria is that trade line that you're getting added to needs to have a low balance. So the balance on the card you're being added to should ideally be between 6 and 10% of the limit, because that is the sweet spot where you always want your credit card balances to be at in order to optimize the score. If it's at a $0 balance, that's fine though too. As long as it's under 10%, that's going to be good. And it's also important for you to check with a loan officer as far as your debt to income ratios go, because sometimes if you get added to a credit card and it does have a balance, that could potentially affect your debt to income ratio. So it's always a good idea to talk to your loan officer about the limit and balance on the card that you're getting added to. Now, the fourth criteria is the card that you're getting added to needs to be 100% positive. The account may not have any late payments in the past or any negative history. If it does, you're only going to hurt your score by getting added to that trade line. So it has to be 100% positive. So make sure all of this criteria is met, and it's also a really great idea to reach out to a credit specialist to ensure that all of the criteria is correct and accurate, as every situation is going to be a little bit different. So we can give you, this minimum criteria, but based on what your situation is, you may need to adjust a few things as far as, the amount of history, the balance that can be on the card. So it's always a good idea to talk to your loan officer as well as your credit specialist when getting added as an authorized user to an existing trade line. Late payments usually result in an extended time frame of qualifying for a mortgage loan. So to keep your mortgage qualification progress moving forward, it is critical that you get caught up on any current late payments, set up your auto payments and calendar reminders to ensure that all of your monthly payments are being made on time. And understand that if you do have frequent or recent late payments, particularly recent late payments, this will most likely push out your time frame of being able to qualify for a mortgage loan. If you have any questions or need any help in regards to late payments, please text My Credit Coach to 435-222-1800, and we will walk you through the necessary steps of getting in touch with a credit specialist to help answer any questions you have in regards to late payments. Thank you so much, and we'll see you next time.